So this trade took place on the 17th of August, and now we're going to be reviewing why it worked, why it didn't work, and we're going to kind of explore it from there. The trade was taken around this area. See this nice little blue circle over here, and then I slapped my stop above this 1 pip. So that was usually just to factor in spread. Let's just look at this here. Right, technically this is an evening star, but not a traditional evening star. An evening star, usually we have a nice little bullish candle, then we've got this doji star. Normally there's a gap, but on intraday charts, like, you know, the 2 minutes, it's not that important. It's slightly more important on bigger time frames. Bearish candle, that's that red candle that you see next to it, that is closed more than halfway. If it closes more than halfway, it is a very, very good evening star. But traditionally, it's in an uptrend and it's usually seen as a top, right? But right now we're seeing it in the context of a consolidation of sorts. At the start, we've got this nice little blue line here, which is basically based off the hourly. So the hourly, I usually mark blue as a low or high that hasn't been hit yet. Then I go, okay, cool, like if it comes in this area and it reacts, then it is a problem. I think I said that in my last video. Definitely check that one out if you haven't yet already. You know, press that like button or subscribe. Every little helps and you get more joyful videos from me. When it hits this line, we've got this dead cloud, dark clouds. It's not a traditional dark cloud, but that's normally fine. So normally, traditionally, we have a large bullish candle. So this green candle here is very large, as you see. That's the tick box. But then this red candle, the bearish candle, has not closed lower than halfway. You know, it is an indication of bearishness, but you know, it's not telling us that there's some real weight behind that move. The second candle or the third candle could be viable as well. So depending on how they close, and as long as it doesn't close above that candle, it is still relevant. Here we have a candle that is closed lower, and that's perfect. Alright, cool, it's hit that line. And then it's come back again, and then we've got a bearish engulfing. It's come all the way down here, and then we've been met with a bullish engulfing. This green candle here has engulfed this little red candle here. That's what a bullish engulfing is. And then we have a doji at the top. Doji is when the close and the open are the same. Usually, if it's a doji star, it would gap up, but it's still a good doji star. It's just, well, they might call it a North Star, for example. And then we have a close below it. And then we've got another bearish engulfing here, rejecting this high. And then we've got the trade here. Before that as well, we would also scroll back. Yep, it's called a free mountain top. That is what it is. So it's basically where price comes to a point 3 times in a row and is rejected. It doesn't have to be level, if that makes sense. It doesn't have to be level. The third one is the signal to go bearish. We've got bearish engulfing here, another bearish engulfing here, and then right here we've got a dark cloud variation, and then it's come back in, and then we've got a bearish engulfing here, I guess. So we've got the MACD. So this is what I've marked up here. From here to here is conversion. We've gone up, down, but then it's like lifted up. The MACD is lifting up, but here at this point, when you match this point to this point, it's lower. Now it's divergent. Now this is where we start to go into perspective. If we scroll back in 2-minute chart, it sort of looks like it's an uptrend, right? So sticking to one chart, that's what you would perceive. You need to know kind of where you are, because that uptrend is only a small aspect of what's actually going on, which isn't that useful to you. That little uptrend that you saw there was actually a pullback on the hourly. So there was a bullish trend at one point, then it's broke trend, and now it's pulled back up, right? Now you're looking for touch points. So here we've got a 38.2 retracement, right? This line here. So I've drawn my Fibonacci from here to here, top to from this point, to try and use different highs to kind of like find the point where it's right. We've got a 38.2 retracement with the resistance line, so that's quite a viable point to suggest that pullback is coming to its end. We're definitely seeing like a reaction. It's literally hit this line here, and now it's starting to come down, and now we're getting a lot of like bearish signals. These charts are taken afterwards, after this trade. I wasn't exactly keeping on top of that. If you see this little bullish upturn here, that is the same as this little bullish upturn here. So this blue line, right, is the same as this blue line here. Price has a tendency to also, when it breaks the TD point, come back to the TD point. But TD points is also like a trend line, but it's slightly different. It's come back, it's basically come near that area and then come all the way down. Now in terms of like projecting how far that would go, at least with TD points, when you have a TD point that was before it, at least in this context, I've measured between here, so between the bottom of this area and the top of this area, right? So it's always the highest point and the TD point. You measure between those two, and then you put the calculation at the point of break, right? And then that tells you how far that goes before it retraces or does whatever it wants. Because that daily line is down there, it shows that there's loads of space, but it's kind of just how you would trade it. You look at the daily, this is the same day here, right? It's already been pierced the previous day, so it's already done that. The main issue, we've got the weekly line in the way, and that's why I used that as a target originally. We've also got a variation of the evening star. You can see that a little bit closer on this area here, so it's sort of like closed below it. Yeah, this is the candle that we want to be looking at. It's poked this grey line, which is a resistance line, but it's also come halfway of the evening stars candle. So that large, when you get really large candles, right, halfway can be a resistance line, and the very top of it can be a resistance line. But you can see literally it's poked, it's gone higher than halfway, right? It's resisted half because it's such a large candle, and then it's come all the way down again, and then obviously like the monthly. But you see like how everything kind of like fits in, how it kind of just sort of squeezes. Okay, so now we're going to literally look at like price targets. So when it's literally broken this line on the hourly, right, we've got the low here, and we've got a low here, and then we've got the weekly line. Just going to the weekly line, but basically we've got our evening star, and then it's broken our trend line, and then it's come all the way down, and then it's hit this base, it's hit this 2-minute support line, and it's made a piercing candle. That is the polar opposite of a dark cloud. It's hit this piercing candle, and the main question is here, should we have come out at that point, right? You can literally see it's broken this point, and this messing around in this area is the exact same point of when it's broken that line. In essence, this is just a meager retracement, because when we actually look at it and we draw a Fibonacci between the bottom and the top, it is a 61.8 retracement, which is a golden level. 38.2 and 61.8 is a golden level for retracement. This large candle and this small candle afterwards, and then we've got a doji. That's a harami. So and a harami is a very good trade to just sort of like just take. If it hits 61 point, it's made that small candle, you can literally just enter on the break. If for whatever reason you were knocked out in this trade, I just happened to be knocked out. But that's what we're kind of discovering. What went wrong, went well, and all that sort of jazz. But yeah, let's move on, like life. As you can see, we can see how it's kind of gone for the target. It was very quick. It was very quick. When it broke that line, at that point we need to start thinking about possible retracement levels, especially if we have higher targets, and actually just drawing in that line, those Fibonacci levels straight away. So it's literally pulled back, we've got a harami, and it's just smacked hit. It's basically hit all the targets. This is where I actually originally had my stop. It was before the weekly. Yeah, no, it's before the weekly. At this point, it's more having those countermeasures in place. I think that is the issue, because at the end of the day, it is a support line. At least in that context, it's a support line. So naturally, I would get a reaction around it, and I should start to perceive that as every time it comes near a line, I should start thinking, retracement, do I come out, and start having these things in place. Yeah, I think that's kind of it really, to be honest. Hope you guys liked this, I guess. I hope it like was interesting to some degree, but yeah, thanks for listening.